Good afternoon, everyone. This is CA Pooja Rathi, and I welcome all of you to today's webinar on reopening of TRAN, a final opportunity to claim transitional credit under GST. Before we start this session, I would take a moment to introduce you to our today's speaker, C. Ravikumar Somani. Ravi sir is a qualified chartered accountant. Who is extremely passionate, indirect tax professional with experience in performing health check reviews, providing advisory and litigation support in the matters concerning indirect taxes. Ravi sir has delivered lectures at various trade and professional forums such as ICAI, CII, National Insurance Academy, and many more. He has also co-authored books on indirect taxes like Practical Guide to GST Audit and Certification, published by Bloomsbury, Self-Study Guide to Indirect Taxes, published by Asia Law House, Practical Guide to GST on Automobile Industry. Ravi sir has also written various analytical and issue-based articles, research papers, and legal updates on indirect tax matters, which are published in various newsletters and online platforms. He loves doing extensive research on the subject and solving critical indirect tax problems. His mission is to spread indirect tax knowledge, solve indirect tax problems, and to raise voice against unscrupulous practices. With this small introduction, I request Ravi sir to please enlighten us on the said topic. Over to you, sir.
Yeah, thanks, Pooja. So welcome everyone on the topic transitional credit. I would say one of the very important topics, but very unfortunately, what I see is there is hardly any discussion on this topic, either at various platforms. People are so busy with day-to-day GST works and the income tax works. Now, I think this is one big thing which is being missed out. The entire reason why this transitional credit thing has come again is because people have missed out in the past. And I am worried that the same fate may happen even now. Unfortunately, I see even government or CBIC also not really promoting this thing too much, which is very much understandable because it is against the revenue. But I think the idea of this particular event was to create awareness, was to discuss various aspects of this transitional credit related aspects. What is this scheme? What are the Supreme Court directions? What is the CBIC guidelines? And most importantly, what are the various issues and practically how businesses need to tackle these issues? So this is the entire framework of our today's discussion. I think in case anyone have any questions, you can simply put it in the chat box, and I would like to make it more interactive rather than taking up all the questions in the end, so that we can discuss and deliberate and try to conclude and find an answer to this thing. In case anyone feels that your question is a little difficult to be put up in a chat and you would like to unmute and have a discussion for the benefit of all, just put it on the chat box that unmute me or raise your hand. Bhavesh from our team would immediately unmute you so that you can put up your question in a proper manner. Bhavesh, you will be able to unmute, right?
Yes, sir.
Perfect. So with this, we will start our today's deliberation. Bhavesh, can you help me with the PPT? So we'll start our today's deliberation on the topic final opportunity to transit past credits into GST. Now, this window has been opened by CBIC from 1st of October 2022 to 30th of November 2022. This was one of the plea by the taxpayers since the time GST law was implemented. But unfortunately, they never opened this window. Many assessees have gone to high courts and got the benefit. But now government has opened this window. So in this entire discussion, we'll understand what led to this window being reopened and various other nitty-gritties. So can you go to the next slide, Bhavesh? So this is our coverage today. We will be looking at brief background legal provisions, because many of us have forgotten section 40, 140, 141, 142. Even to me, if I have to refresh myself and look at the old provisions, I have to open the book and read again because it's been 5 years this entire change has happened. Then we will try to understand or dissect what is the directions issued by Honorable Supreme Court. We will look at guidelines issued by CBIC. There is an advisory which is issued by GST network. We'll try to understand that advisory. Then we will look at practical issues and legal issues in this entire framework. And if time permits, then I would also like to, take you through the portal, actual navigate the portal, how the portal looks like, and for where to fill what. Okay, so we all know that transitional credit was specifically transferred through TRAN 1 and TRAN 2 forms. There was one more form which is TRAN 3. We can discuss that part as well. This was mainly to transfer the carried forward and pre-GST credits relating to service tax, central excise, VAT, additional duties of excise, CVD. So these were the various taxes that were to be transitioned into the GST regime. What has happened is that government in the GST law, it has been mentioned that assessees will be given 90 days to transition the credits, 90 days, and commissioner can give an extension for another 90 days. So 90 days plus extension of another 90 days. So in total, rightly, assessee was eligible for 180 days to claim the transitional credits and transitional benefits. Now, practically what has happened, on 1st of July 2017, this form was never available on the GST portal. The form came into the portal only in the middle of September 2017. And again, the form was not upright, it was not proper, it was again rolled back, and it again came in middle of October 2017. And from there, I think the time limit was up to December 27th, 2017. So precisely whether assessees got full 180 days to file the form, answer is no. Assessees precisely got round about 100 days, not more than 180 days. So all that, forget about the technical glitches and other aspects. What is mentioned in the law that assessee will be given 180 days, that was not given. So that was one of the arguments that was taken before various high courts. Many assessees could not file the form. Now, assessees who could not file the form, there were three types of issues that were faced by the assessees. First issue was technical glitch. They were trying to file the form, but system was not allowing. System was, putting some technical glitch. Then the second issue was assessees have filed the form, but in the incorrect field. 10 has been added extra, or 10 has been added less. CGST has been added as SGST. SGST has been added as compensations, as whatever. All this type of permutation and combination of errors have taken place. And the third issue was assessee has simply missed filing. No technical glitch, nothing. Simply he was not aware that there is something like TRAN 1 that needs to be filed. Okay. Now, the question that comes is, on all these grounds, multiple assessees have went to file writ petitions and they've gone to various high courts in the country seeking benefit on one of the fundamental arguments, rather two arguments which the assessees have taken. One is that input tax credit is a vested right, and the ITC is a constitutional property. ITC is a property. It is a constitutional property of a assessee, and the same cannot be denied. And basis the transitional provisions, the assessee should have the right over such claim. And considering various other Supreme Court judgment of Eicher Motors, Daiichi Kakaria, it was mentioned that input tax credit is a vested right and this benefit should be available to the taxpayers. Now, multiple high courts have given judgment. I think almost all the judgments were favorable. But this benefit was coming only to those people who have filed a writ before the high courts. Let us say if a particular assessee has not filed any writ petition before the high court, unfortunately, he was not getting the benefit. Second important argument which assessees were taking is that the time limit which is being mentioned in the rules. Let me tell you, the time limit is coming in the rules, and the time limit is directory in nature and it is not mandatory in nature. So this was another argument that was taken, that this time limit cannot be said to be a sacrosanct. It is more directory in nature. It is coming from the rules and it is not coming from the legal provisions of the act as passed by the parliament or legislative assembly. Third very important aspect which was brought out in the high court was that transitional credit. Ultimately, what the law says, when you look at section 140 or any other sections, 140, 141 and 142, it says credit must be transferred. Credit must be transferred. It doesn't say TRAN 1, TRAN 2, TRAN 3. So this TRAN 1, TRAN 2, TRAN 3 has come in the rules. Correct? So as long as I transfer the credit by any mechanism, TRAN 1, TRAN 2 and TRAN 3 are only the vehicles to transfer, which is only a procedure of transferring. Just because the procedure is not there, one cannot be denied of the benefit or the substantial right cannot be denied. This was another argument. Considering all these arguments, matter went to Supreme Court, and Supreme Court has given directions that assessees should be eligible to transfer the credits. And the directions are very wide. It says that there is nothing like this benefit is available only for those taxpayers who have had any technical glitch. Nothing. Any taxpayer whatsoever, whether he has filed, not filed, missed, any reason, they can now take the benefit. But before I go to the Supreme Court directions, there is a very detailed directions given by Hon'ble Supreme Court. Before I go to the directions, what I thought is that we will first refresh ourselves with the transitional provisions. What is the benefit that is available? First, let's look at that. What is the benefit that is available as per the legal provisions? And then we will go to the Supreme Court directions. Bhavesh, can you move to the next slide? So now the legal provisions are like this. First and fundamental thing is closing balance of credits lying in service tax, central excise and VAT returns. So whatever is the closing balance of credit lying in the old returns, that can be transferred to GST. So let us say if an assessee has filed the service tax returns, the last return was April to June, or the last excise return was the month of June, or the last VAT return was the month of June, or whatever the legal provisions of the VAT. Whatever the closing balance in the old return, that can be transferred, the input tax credit balance lying in the old return, that can be carried forward to GST regime. Now here it is very important that it's only the closing balance. Anything which is not at all coming in the returns, that cannot be transferred here. So fundamentally, it is very important that only the balance which is lying in the old returns can be transferred. If the balance itself is not transferred in the service tax, central excise or VAT returns, then we'll come to that discussion in the issues. So if any assessee has a closing balance in service tax, central excise or VAT returns, and that closing balance is not transferred to GST, then they can transfer it now. Then transition of input tax credit on capital goods. Now under capital goods, under central excise law, there was a provision that the credit of capital goods is available in two installments, 50% in the year of purchase and the 50% in the subsequent year. So what has happened is that few assessees have taken the input tax credit only 50% and the balance 50% they have never taken. So that balance 50% of capital goods is also allowed to be transferred in the TRAN 1. Let us say if an assessee has not taken even the 50%, so full 100% he can transfer through TRAN 1. So this was on the transition of capital goods. Now, there are few assessees who were not registered under the earlier law. Let us say I am not at all registered under central excise, or I'm not registered under service tax, or I'm not registered under VAT, or having been registered, I was under the exemption category. My goods were exempted under central excise or service tax or VAT, or my goods were under the abatement or the concessional rate, where I was not entitled to input tax credit. Obviously, right, if I am not registered under the earlier law, I was not entitled to the input tax credit. So those assessees who were not registered under the earlier law, they were not entitled to input tax credit. And for them, whatever is the goods that is lying in the stock, whatever is the goods that is lying in stock, that stock related credit was available in the GST regime, because when you sell the stock, you will be paying GST. Correct? Now, in this entire thing, there were two categories of taxpayers. Category 1 is those taxpayer who is having a tax paying document. Let us say I am not registered under service tax, but I have purchased some goods on which there is a central excise. I have a bill having the central excise duty. In that case, whatever is the stock on which the duty is paid, and if I have a tax paying invoice, input tax credit was available on the goods lying in stock as on 30th June 2017 for the last 12 months. So whatever are the goods that I have purchased between July 2016 to June 2017, which is lying in stock, the input tax credit was available. On the other hand, there were few taxpayers who have a purchase document, but they were not having a tax paying document. For example, trader. Trader may not have purchased the material from excise dealer. He must have purchased the material from another person who is also not registered. So in that case, there was another provision which mentioned that assessee will be eligible for a standard input tax credit of 40% or 60%, as the case may be, even if they don't have a tax paying document. Even if, let me tell you, this 40%, 60% benefit is available even if you don't have a tax paying document. Of course, it is important that you must be having a purchase bill. Okay? So any assessee who was not registered, or whose goods were exempted, or whose services were exempted, or were under abatement or composition or any concessional scheme under the central excise, service tax or VAT, and they were not entitled to SENVAT credit or input tax credit in the earlier regime, they were now eligible to take input tax credit under GST on the stock. Okay? Now, apart from this, there was one more mechanism. There were few assessees who have not taken the benefit because the goods or services were in transit. For example, let us say, I had to file form TRAN 1, but the supplier has issued bill on 30th June, but I have received the bill in August. Or I have received the bill in September, October, November, December, January, February, whatever, later. So it is not recorded in my books because I received this bill later. I have accounted this bill later, and that's why I did not take this credit in my previous return. I did not claim the credit in my previous return. So in this case, there is a provision which mentioned that input tax credit of goods or services for which the bill is received after the 30th June of 2017, but it is accounted in the books within 30 days. I think this 30 days was extended by another 30 days. So I would say essentially 60 days. If it is accounted within 60 days, then this particular aspect was also available as input tax credit in the GST regime. And I'll tell you what, many businesses have missed claiming input tax credit on this particular point itself. Now, the next point was distribution of credit. Let us say if I was having an ISD registration under the erstwhile central excise law, even whatever is the credit lying in the ISD registration could also be distributed to the registration under GST. Similarly, there was a transfer and distribution mechanism of centralized registration. Now, this is very, very important. Under service tax and central excise, there was a concept of centralized registration. So let us say if I am under centralized registration, I could distribute this credit to any of the states. I am having a centralized registration in Maharashtra, and I feel that this credit must go in Haryana. I could actually distribute this credit in Haryana through the concept of centralized registration. So here also many taxpayers have faced issues. Either it is incorrectly distributed or not distributed, or distributed to wrong state. So like that, various issues have been faced even in this particular concept. Now, in the GST law, we have this mechanism of payment not made within 180 days. If the payment is not made within 180 days, then the input tax credit needs to be reversed and it can be re-availed as and when the payment is made. So similar concept was also there under service tax law, but instead of 180 days, it was 3 months. So if any assessee has reversed the ITC, then they could reclaim that as long as they file the returns, or they do the reclaim within 3 months. Then there was another concept where, let us say, if any goods are lying at the job worker's premises, I have a credit which I need to take on the stock, but that stock is lying at the job worker's premises. So both principal as well as job worker need to file the declaration, and both of them have to put the details of the stock, and the details of the stock must match. If the details of the stock doesn't match, then the credit would be denied. In fact, there was one taxpayer where, because the details submitted by the job worker was not matching with the details submitted by the principal, the department created dispute for the principal on the input tax rate on stocks. So this is an opportunity to correct and rectify that mistake by having a proper communication with the job worker and principals. And last but not the least, very important, was in the context of builders. Builders were eligible to transfer the credit of goods that are lying in stock. See, what happens in case of construction is that let us say the construction is completed 60%. As on 30th June 2017, the construction is completed 60%. But a lot of builders have paid full 100% tax. For example, in Maharashtra, the tax was paid at the time of registration itself. At the time of agreement itself, the tax was paid. Similarly, service tax was also paid on advances. And even in Maharashtra, later they brought a provision that on the receipt basis, the tax would be payable. So it so happened that builders' completion is 60%, but they paid taxes, that is the VAT or service tax, of 80%, 90% or full 100%. So 142(11)(c) was the provision which mentioned that the builder needs to pay GST on the balance 40%, which is not completed. So let us say builder has already paid taxes on 60%. For the balance 40%, which is not completed, where the completion has not taken place, where the completion will happen in the GST regime, builder need to again pay GST on that 40%. The question comes is, I have already paid service tax or VAT. So that whatever service tax or VAT which was paid can be claimed as credit through form TRAN 1 under section 142(11)(c). Okay. And there are a few other issues relating to builders that we will discuss as and when the issues are there. So this is, I would say, a brief, refresher of this entire transitional provisions. There were other miscellaneous provisions in the context of sale on approval or return basis, then principal agent and all those things. But I'm not going into the nitty-gritties too much. These are precisely the major transitional provisions that were there. Now, the directions of Supreme Court. What is exactly the directions given by the Supreme Court in the case of Philco Trade Center? I have not changed anything here. I have copied and pasted the directions of Supreme Court as it is. Okay. So I would like to read it because this is very, very important. Goods and Services Tax Network is directed to open common portal for filing concern forms for availing transitional credit through TRAN 1 and TRAN 2 for 2 months, that is 1st September 2022 to 31st October 2022. So this was supposed to open from 1st September, but GST network as usual was not ready, and eventually they asked for extension, and eventually it got open on 1st October 2022. Better late than never, I would say. So finally, these forms are opened from 1st October 2022. Today we are sitting on 18th October 2022. 18 days are already gone, and the portal is up and running. So precisely, businesses have now got about 42 days to claim this benefit. Considering the judgment of the High Courts on the then prevailing peculiar circumstances, any aggrieved registered assessee is directed to file the relevant form or revise the already filed form, irrespective of whether the taxpayer has filed writ petition before the High Court or whether the case of a taxpayer has been decided by the Information Technology Grievance Redressal Committee. Now, this is extremely important. What does the Supreme Court say? Supreme Court says that irrespective of whether or not you have filed writ petition, whether or not you had any technical glitch, you must have simply missed. Even in that case, you can go ahead and file this form and take the benefit. So it's a very, very wide implication. GSTN has to ensure that there is no technical glitch during the set time. I hope that GST network is taking care of this particular aspect. The concerned officers are given 90 days thereafter to verify the veracity of the claim and pass appropriate orders thereon on merits after granting appropriate reasonable opportunities to the parties concerned. It means this transitional credit is not going to come automatically. ऐसे नहीं होगा कि हमने पोर्टल पर डाल दिया and immediately the credit will reflect. No. Once we upload and file the forms, this will go to the jurisdictional officer. Jurisdictional officer will verify. Basis the verification, he will pass an appropriate order, and basis the order, you will get the credit. So it is very important that we double verify, double check our claims before filing the forms. Thereafter, the allowed transitional credit is to be reflected in the electronic credit ledger under GST. If required, GST Council may also issue appropriate guidelines to the field formations in scrutinizing the claims. The special leave petition by the Supreme Court. The petition is dismissed and the assessee has been given the benefit. All the matter. I don't think any of the state departments till now have come up with any guidelines, but I'm assuming that the guidelines issued by CBIC will be equally adopted by the state VAT departments. There are some peculiar circumstances in case of state VAT departments, which probably, state VAT department would have to take care by issue specific guidelines. Applicant, now we are discussing the guidelines issued by CBIC. What is the guideline that the CBIC has issued in this regard? CBIC says applicant may file fresh or may revise the earlier filed TRAN 1 and TRAN 2. So you can either file a fresh form, or if you have already filed, you can revise. Correct? So whether you have filed earlier or not filed earlier doesn't matter. In case of revised filing, facility for downloading the earlier furnished TRAN 1, TRAN 2 will be made available on the common portal. So if you are filing a revised form, you can download the earlier form. Declaration must be given in Annexure A. In Annexure A, we need to give a declaration. If the applicant is claiming credit in table 7A on the basis of credit transfer document, then a copy of TRAN 3 containing the details also needs to be uploaded in the PDF format. Now here, form TRAN 3 is not automatic. It is not automatically separately written. We need to fill form TRAN 3 manually and we need to upload. Okay. What is TRAN 3? Sir, TRAN 1 or TRAN 2 तो सुना था. ये TRAN 3 क्या है? TRAN 3 is a mechanism through which dealer can take, customer of dealer can take the credit from the manufacturer. For example, let us say there is a manufacturer A. Manufacturer A has charged central excise duty on the bill. Manufacturer A has given the bill to dealer or distributor B. Dealer and distributor B was not registered under central excise. And he has given a bill to customer C by charging VAT. Because he is not registered under central excise, there was no central excise duty. Now here, the customer C could actually obtain the invoice from manufacturer A based on communication with distributor B and claim full input tax credit by way of credit transfer document. So this is mainly in case of automobile dealers or any other distributors who were not registered. And if we have purchased, our client has purchased from dealer distributors, they can look at TRAN 3 because this is a very big advantage. Now it says one more thing, that no claim shall be filed in table 5B, 5C of TRAN 1 in respect of such C forms, F forms, H forms, and I forms which have been issued after 27th December 2017, after the earlier due date of filing TRAN 1. Now department says that if you have received the C form after 27th December 2017, then you cannot use that C form for the purpose of claiming the benefit. Now I have fundamental questions. From where this 27/12/2017 date has come? In the Supreme Court directions, at least, there was no such restriction. Point number one. Even when I look at reading the CST Act, there is no such restriction at 6 months or whatever. And the most important point is, how is CBIC, which is an authority under the central laws, which is a board under the central laws, Ministry of Finance, has power to issue circular or guidelines in respect of the matter pursuant to VAT. One argument that can come is it is in the context of CST. But I think even in the context of CST, the procedural requirement is to be laid down by the respective authorities. So these are, I would say, legal questions. I will go in little bit in more detail in this point once we go to the issues. Now there is another thing which is called TRAN 2. Now TRAN 2 is a mechanism where assessee who is not having the bills, tax paying document. Let us say I am a trader. I don't have a central excise paying tax paying document. So in that case, assessee was eligible for a standard input tax credit of 40% or 60%. 40% if the GST rate is 18%, 60% if the GST rate is 28%. This benefit was available for 6 months, July 2017 to December 2017. So now what they are saying is that you don't file 6 different forms, 6 different applications. One consolidated form for all the 6 months is sufficient. I have a fundamental question here, that why this benefit is restricted only to 6 months. When I have the goods lying in the stock, I have the purchase bill. The material was purchased in last 12 months. I will be paying GST whenever I will be selling these goods. Just because I have sold these goods after 6 months, how can the credit be denied, be justified? You know, again, all the concepts of vested right and all those other things I am trying to bring here. We'll discuss this. There is already one more Gujarat High Court judgment. We'll discuss that part on this aspect. In the tax period column, you just put the last month. That is, you can put December or whatever the last month, and don't file for all the 6 months. File one consolidated form. Now, following to be submitted to jurisdictional tax officer within 7 days of filing TRAN 1, TRAN 2. So after filing the TRAN 1, within 7 days, we need to submit the self-certified copy of TRAN 1, TRAN 2 after downloading from portal, declaration in Annexure A and copy of TRAN 3, covering letter or any other evidence that you want to submit. My suggestion is don't delay these 7 days. If you delay these 7 days by 8 days or 9 days, I'll not be surprised to know that officer will say, sorry, 7 days time limit is over. I cannot give you the benefit now. And the entire scheme to remove litigation will only create litigation. So my suggestion, although this 7 days in my view is a procedural timeline, but please don't delay. The applicant shall keep all the requisite documents, records, returns in support of the claim. And whenever the officer asks, he need to give all the documents to tax paying officer for verification. Okay? Once submit button is clicked, the form gets frozen and no further editing of details is allowed. This frozen form would then be required to be filed on the portal using file button with digital signature or EVC. Utmost care and precaution to be taken and details to be checked thoroughly before filing TRAN 1, TRAN 2, as applicant can edit the details on the common portal only before clicking the submit button on the common portal. Why I am reading this verbatim is because if you have filled wrong details and wrongly clicked the submit button, then nothing can happen. You have lost that money. So it is a humble request to check multiple times before submitting the form. Anything if it is wrongly submitted, I don't think even High Court will come to your benefit later. Because Supreme Court has already given guidelines, department has opened the form. Now if you do the blunder, don't expect relief from High Court. Have a proper maker checker control in place. If you put the details in wrong field, 10 more, 10 less, or whatever, then tomorrow you will face the consequence. So please have a maker checker control internally. Let us say there is a junior who is filling the form, so manager can review it. Manager is filling the form, so someone senior can review it. But then please have to verify multiple times. GSTN to issue advisory, but that advisory has already come. Once the form is filed, no further opportunity to again file or revise either during this period or subsequently will be available to him. Once it is filed, gone. There is no concept of revision. There is no concept of rectification. There is nothing opportunity which is there. It is Bible and it is over. So we need to be very much sure. The option for filing TRAN 1, TRAN 2 from October 22 to 30th November is strictly a one-time opportunity. And they have put it in the caps lock. one-time opportunity. So credit earlier availed has either wholly or partly been rejected by the proper officer. The appropriate remedy in such cases is to prefer an appeal against the said order or to pursue alternate remedy available as per law. Now, CBIC guideline says that let us say I have already availed the credit, which has been rejected by the department. So I cannot again claim it here. I need to prefer that appeal, which is proper. You cannot pursue two matters together. If there is already a show cause notice issued rejecting the credit, or the matter is pending before appeal, then you cannot again file this form and contest. There is only one finer aspect here, which I'll come and discuss later in the issues. The declaration filed by the applicant will be subjected to necessary verification by the concerned officer, and the applicant is required to produce the requisite document. So this we have already covered. After verification of the claim, jurisdictional tax officer will pass an appropriate order thereon on merits after granting reasonable opportunity of being heard to the applicant. So after verifying the form, jurisdictional tax officer will pass an appropriate order. Now, when I saw Supreme Court guidelines, Supreme Court directions, Supreme Court has categorically given a direction that the officer has to close this in 90 days. But in the CBIC guidelines, this 90 days time limit is missing. So in my view, CBIC to this extent is breaching the directions of Hon'ble Supreme Court. The question that comes is, what if whether the order issued, see, if the order is issued by the jurisdictional tax officer after 90 days, if it is a favorable order, nobody is going to litigate. But if it is non-favorable order, then one of the litigation argument that the assessee is going to take is that this order is invalid because it is issued beyond the period of directions given by Hon'ble Supreme Court. One can always argue that the time limit is directory and not mandatory. I am of the view that time limit is directory and it cannot be treated as mandatory. So officer will have that flexibility available. Whatever the officer allows, that credit will be reflected in the electronic credit ledger. Let us say if the officer disallows any credit. If the officer disallows any credit, he has to pass a rejection order, and that rejection order will be appealable order, and assessee can file an appeal against the rejection order in case he is aggrieved by the order. In the CBIC guidelines, they have also issued some annexure, part A and part B. So wherein you need to give the details whether you have earlier filed the form, what is the date of furnishing TRAN 1, TRAN 2, amount of credit claimed earlier through TRAN 1, what is the CGST credit, what is SGST, what is IGST, whether any show cause notice has been issued against this matter, what is the status of that show cause notice, whether any credit is held to be ineligible and reversed, whether any appeal has been filed, whether any writ petition has been filed, whether any refund application has been filed. So I think these are the various details which are very self-explanatory. We need to submit by way of yes, no, yes, no. We should be wary of the facts before submitting the details. If any wrong details are submitted, then tomorrow an allegation of misstatement can be alleged by the department. Part B of the annexure says that we have, it's a declaration basically that assessee is in possession of all the documents, evidence, invoice, statutory declarations, Form C, and all those things. Now, serial number 3 is very, very important. It says we have not claimed any credit within the meaning of 140, 141, and 142 in any return in form GSTR 3B filed by me or us. So assessee who is claiming the benefit here should not have taken the same benefit in GSTR 3B. If the assessee has already claimed in GSTR 3B, then that assessee cannot claim the benefit again. If we have claimed credit within the meaning of 140, 141 and 142 on account of central tax, state tax in form GSTR 3B filed by me and have reversed the amount along with interest or have not reversed the amount along with interest. Now let us say that if any assessee has already taken the benefit in GSTR 3B, in that case, the assessee must mention that they have taken the credit in GSTR 3B or they have taken the credit and reversed along with applicable interest. And the another declaration is, if any assessee has claimed refund of these taxes, then whether you have applied for refund and whether or not you have applied for refund, the details must be coming out here as a declaration. This is precisely to make sure that there is no double benefit that is being claimed by the assessee in the context of transitional provisions. I would like to take a pause here and see if there are any questions in the chat box. Then we move on to GST and advisory and issues. So are there any questions? Okay, there's one question. What if dealer has not filed then VAT return in time? That was condition earlier. Okay, so you mean to say that there was a dealer who was registered earlier, but he has not filed the VAT return within time. There was one condition that the 6 months return must have been filed. And if that is not filed, now I think, see, again, in my view, that condition is only procedural in nature and directory in nature. As long as there is a legitimate input tax credit which has been taken, the VAT return is later filed and whatever the delayed interest penalties and the late filing fee has been paid, and you have the credit availing documents, you can transfer this credit in form TRAN 1. Because we need to understand that not all conditions are substantive in nature. There are some conditions which are substantive and there are some conditions which are procedural in nature. In my view, these conditions are procedural in nature and the benefit should be available. So a proper representation must be made before the officer. In case the officer is rejecting the application, then appeal can be preferred against that rejection. Correct? Then there is one more question. In case one of our client, there had service tax audit during 1920 and client has paid 45 lakhs on RCM. Since the amount got paid in 1920, the client should not take the ITC of RCM paid under whether the ITC of the said amount can be taken now. Sir, this particular question I'll be covering in the issues, so I'll take that up. Time limit to file TRAN 1, TRAN 2 is 31st October or 31st November. It is up to 30th November, not 30th October. Okay. So now this is the advisory issued by GSTN.
Sir, one more question is there. I'll unmute them. They will speak, sir.
Okay, please.
Hi. Yeah, here ML Baheti. Hello.
Yes, sir. Yes, sir. Sir, we can keep it very crisp and just, yeah, please let me know your question, sir.
We have already filed writ petition. Result is in our favor, but still officer has rejected our claim.
Doesn't matter, sir. What
in that
you can
case,
do,
again we can.
okay.
Yeah.
So what you can do, sir, you can file form TRAN 1. Okay, and claim the benefit. And you can write to the officer that you have not claimed this benefit in GSTR 3B. And if any writ is already pending, then you can withdraw the writ application, whatever stage it is. And as long as you have not taken this credit in GSTR 3B, you can claim it in form TRAN 1. The revised form.
Okay. And one has to be filed again now.
Yeah. Yes. Yes.
Even earlier claim was rejected by AO. Yeah.
No, the earlier claim was rejected in the sense, have you claimed it anytime till now? Have you claimed it in GSTR 3B or anywhere?
No, we got writ petition order also, but still he had not given claim against that.
Okay, that's what I'm telling you. Now you can claim the benefit in the revised form TRAN 1.
Revised form. Okay,
Yes.
okay. Yeah.
Okay.
Thanks.
Yeah. So this is the advisory issued by GST network. So I think I would keep the advisory on hold for the time being. Let me go to issues. Rather, what I will do is I will straight away explain the GST portal in the end. Because this is just a screenshot, I would rather prefer, explaining the actual portal. Now let us look at various issues, practical issues and legal issues, this entire filing of TRAN. First and fundamental thing, which is very, very important, is that this particular benefit is applicable or available to any taxpayer, irrespective of whether there was a technical glitch or whether there is a no technical glitch. So there are few people saying that it's only in the case of technical glitch this benefit is available. Answer is no. What is really important, and please pay attention, what is really important is that you need to give the complete details now. You are not required to give only the balance details. For example, let us say your entire input tax credit, which is eligible, is 10 lakh rupees. And out of 10 lakh rupees, earlier you have claimed 8 lakh rupees and you missed to claim 2 lakh rupees. So now you are required to give the details of full 10 lakh. You are not required to give only the balance incremental or the differential amount. Full details. It is a revision of the earlier form, and therefore all the details that were given earlier have to again be given in this form also. Okay, so it is not just differential or incremental details. Extremely important. Next very, very important aspect is many SSEs, they have already taken this credit in GSTR 3B. And it is already lying in their electronic credit ledger. So the important question that comes is, if I have already taken in GSTR 3B, do I need to again file this form TRAN 1? Because I have already taken credit, I have already enjoyed that credit utilized. See, we need to understand that this scheme is a mechanism to regularize the mistakes, mechanism to regularize the errors. Even though you have already transferred the credit and the same is reflected in your electronic credit ledger and you have also utilized, it is suggested to again file the credit form TRAN 1, take the credit, route it through the right procedure and regularize the error. If you don't do it, tomorrow Supreme Court or High Court or department will take an argument that we have given you 2 months window to regularize. Why you did not regularize at that point of time? So it's extremely important that even though you have taken this credit in GSTR 3B, you again file TRAN 1 and claim the credit. Obviously, what you have already taken, you need to reverse that particular credit. Now, the question that comes is, let us say I reverse the credit and I take the credit in TRAN 1 and file TRAN 1. After the officer verifies, he again rejects the claim. So which means I have lost what I was earlier having, and now I have also lost what I have filed now. So this is a double-edged sword, that comes when it comes to claiming the credits in the case of GSTR 3B. The question here is one of the aspects that can be looked at, that assessee can claim the credit through TRAN 1, give appropriate disclosure to the officers. Once the credit is transferred through TRAN 1, only later he can reverse the credit through GST or 3B and not earlier. I would say this is more of a practical view. But here the problem that will come is officer will not accept. Officer will say first you reverse, only then I will allow. And assessee will say first you allow, I would like to reverse. So this is going to be a tug of war between officers and assessees as far as the credits that have already been claimed through GSTR 3B. So here I would say businesses would have to take a conscious call depending upon the facts of each case, and more specifically, depending upon whether earlier you have given any disclosure or any intimation to department when you have taken in GSTR 3B, or how you have disclosed these details in form GSTR 9 and 9C of the financial year in which you have taken this credit in GSTR 3B. So all these disclosures will be important to take decision whether to again show these details in TRAN 1 or nothing doing, keep silent. Whenever department comes for audit, you explain them. So this is going to be one important, litigated matter. Now, another very important issue is that when we look at part B of the form, it says reversal of input tax credit with interest. Officer will say whatever credit you have taken in GSTR 3B, I will allow that credit in TRAN 1. I don't have any problem. I will allow in TRAN 1. You reverse the earlier credit with interest. Now, in my view, the interest levy is illegal, arbitrary, unjust, and not correct. Reason being, the transitional form was to be made available by the department on July 1st, 2017, which never happened. And this mechanism, all this 5-6 years of litigation was created by the department, and it is the department's fault of delaying the entire mechanism of claiming transitional credit. Assessee cannot be penalized of the interest. So I am absolutely clear that interest would not be applicable for the assessee for reversal of credit already claimed in GSTR 3B. Apart from this, fundamentally under the CGST Act, SGST Act and IGST Act, there is no mechanism, no provision allowing the officer to charge interest for the transitional credits. Section 50 is not applicable to transitional credits. And there are many other legal arguments that are there. So what is important is how we plead the entire matter and how we declare the details before the department. But in my view, it is very important that even if the benefit is taken in GSTR 3B, we again disclose and regularize the entire matter. If the officer is not allowing, we should contest and file an appeal against the matter, but not regularizing can create bigger problems. Next very, very important aspect is, let us say assessee has taken the credit, but he has taken the credit in incorrect manner. CGST has been wrongly transferred as SGST. CGST has been transferred as compensation cess. The credit has been taken to incorrect GST number. TRAN 1 has been filed in incorrect entity. So multiple permutation and combination of issues have taken place. I have come across issues where, it is as petty as 1 0 has been short written or 1 0 has been excess put up. Even those kind of issues were there. So how do we deal? Now the answer to this question will depend on what has been done later. Whether whatever the issue or error that has happened, whether the assessee has later rectified either in GSTR 3B or in GSTR 9. If the assessee has already rectified that error in GSTR 3B or GSTR 9, then whether I need to again give the details in TRAN 1 or so let's look at first part. So in my view, even if the rectification has taken place in GSTR 3B or GSTR 9, that was not the correct procedure of rectifying. So it is important that assessee follows the due procedure given in the law and regularize this entire matter by again filing the details through revised TRAN 1. Okay. Now let us say whatever error has been done is not at all rectified till now. So now it is an opportunity to rectify that, put the details in right columns, right fields, and submit the revised form TRAN 1 properly. Okay. Next is credit in case of capital goods. Now, in case of capital goods, there were two issues. There was a lot of people were saying when the GST was getting implemented that there is no mechanism to claim transitional credit in case of capital goods that are in transit. Let us say the capital goods were removed from the supplier's premises on 25th June, and it has come to the recipient premises on 10th July. Assessee could not claim the credit in the earlier return. And there is no mechanism to claim the credit because the capital goods benefit is that benefit is not available. It is only available for input and input services. In my view, it is not a correct understanding of the law. Even for capital goods that are in transit, the benefit of transitional credit is available and they need to give the details under section 140 subsection 2 and claim the credit. This is point number 1. Point number 2, and very, very important, there were many central excise and service tax assessees who have done tremendous investment and development and purchased huge machines in financial year 2016-17 and 17-18. And they could not claim the credit of capital goods because the outward was exempt. For example, food industry. Food industry was paying central excise at the rate of 6% without any benefit of transitional credit on capital goods. Capital goods credit was not available for many other sectors. If I am exempt under central excise or service tax or under abatement scheme, I was not eligible for CENVAT credit on capital goods. For those taxpayers, it is an opportunity to revisit whether any missed capital goods credit can now be claimed. Very, very important. What is important also to be looked at as to how you have filed your income tax returns. If you have already claimed the duty portion as depreciation under income tax, then unfortunately this benefit would not be available. Okay? Unless you feel that there is a benefit in revising the income tax returns or paying the differential taxes under income tax along with interest and penalties and claiming the benefit under GST. So this is something I would say a cost benefit analysis that the businesses would have to do. Next, I would say one of the very, very important aspects is transfer of credit where earlier not registered. So let us say you were not registered under central excise or service tax or VAT because you were under the exempted category or under the concessional rate scheme or under any abatement. Obviously, you were not eligible for input tax credit in the earlier law. From the GST law, everybody is taxable and you are also required to take registration and collect and pay GST. Now you have goods lying in stock on which you will be paying GST. Now for the goods lying in stock, there can be two scenarios. You have a tax paying document, that is the tax invoice, or you don't have a tax invoice. First, if you have a tax invoice, then you are eligible to claim the credit of whatever goods lying in stock for the last 1 year, 12 months. Now here, there are 2 to 3 important issues. First, I have seen many assessees who have not calculated the details of stock properly as on 30th June. Or whatever they have calculated at the time of audit and finalization, it was completely different. So if any of the assessees feel that the inventory that was shown as on 30th June 2017 is incorrect, and they are eligible for additional credit because the actual inventory which was lying in stock is much more, and you can justify that based on the certificate from the auditor and other evidences, then you can actually claim that credit now. Point number 1. Point number 2, there were many builders which I have seen. Department has denied the input tax credit to builders on the cement, steel, bricks, sand, and all other raw material that has already gone into the building. There was an argument by the department that input tax credit is eligible to be transferred only on those goods that are lying in stock and they are actually not gone into the building. We are not in agreement with that view. Many assessees I have seen in Maharashtra, especially in Pune, have reversed this credit, or they have not at all claimed this credit, and more specifically builders. I would say this is a wonderful opportunity for all these builders to calculate the inventory, even the goods that have gone into the building, semi-finished building as on 30th June, and they must claim this transitional credit. Very, very important. And third issue was in the case of first stage and second stage dealers. Under central excise, there was this concept of first stage and second stage dealers. Now these dealers, they were actually not taking credit. They were only passing the credit. So when they have purchased, the pricing was determined assuming that they will be eligible to pass the credit. Now suddenly transitional provision comes and it says that this benefit is available only for the inventory of past 12 months. Now let us say there is a trader who has the inventory of last 3 years or 4 years, 5 years. Suddenly a law comes and says we will not allow to pass this transitional credit. This particular time limit of 12 months is held to be unjust and arbitrary, clearly against Article 14 of the Constitution of India by GMMCO Limited and Heffel Limited, Gujarat High Court. And I think later there were a couple of more judgments on this matter. So in my view, many first stage dealers, second stage dealers and traders, they have not claimed the credit for goods lying beyond 12 months. Now we have Gujarat High Court judgment with us. So if there is any goods which is beyond 12 months, even that should be eligible as credit. Next, very, very important. Till now, whatever we discuss is in the context where the assessee is having a tax paying document. Now let us say assessee is not at all having a tax paying document, but they are having a proper purchase invoice. So they are eligible for credit basis the TRAN 2. Many assessees have claimed the credit basis TRAN 2. But now if you feel that you have the tax paying document and earlier you have taken credit only 40% or 60%, but now you actually have the proper tax paying document. So you can revise and reclaim the full benefit instead of only 40% or 60%. So this is also a very, very important aspect. Next, very important point is ITC of centralized registration. Let us say SSC was having centralized registration in Maharashtra, and he has transferred the credit in Maharashtra only. Now in Maharashtra already he was having a credit of 10 crores. He has transferred another 2 crores. So it is blocking the entire funds. And the same SSC is paying in cash in Gujarat, Haryana and Rajasthan. So now you can actually think of revising the TRAN one. Instead of taking that credit in Maharashtra, you can transfer the credit to Haryana, Gujarat or Rajasthan so that you can utilize faster. Next, in the case of principal and job worker, I've already mentioned that the credit is eligible for the goods lying in stock, even if the goods are lying in the job worker premises, provided the job worker and principal both give the declaration and the declaration must match. If the declaration doesn't match, there will be a problem. ITC on semi-finished goods and finished goods for builder, I have already covered. Transfer of ITC in case of builders under 142(11)(c, that also I have already covered. Now here also I have seen many builders, they were not even aware that there is something called 142(11)(c. I have seen builders who have paid both GST as well as service tax on the same supply. On the same transaction, they have paid service tax because they received advance. But the demand letter was issued in GST regime. Again, they have paid GST. They have paid VAT because VAT was paid 1.25% at the time of agreement itself on the full value. They have again paid GST because the completion was only 60%, on the balance 40%. They again paid GST. Clear case of double taxation. Any builder who has made the payment of taxes twice because of this, they can actually now file Form TRAN 1 and take the benefit. Now, one fundamental issue that comes. Let us say you have claimed TRAN 1 of 10 lakhs. Out of 10 lakhs, you already claimed 8 lakhs earlier. Now you are claiming only additional 2 lakhs. Whether department, when the officer does the verification, whether officer is entitled to verify only the additional 2 lakhs or whether the officer will entitled to verify the full 10 lakhs. In my view, the officer is entitled to verify full 10 lakhs. Reason being, you are not filing the incremental form. You are revising the entire form. So it should not happen that to claim one benefit, now you are losing the benefit which you earlier claimed. So be 100% careful before you are transmitting any credits and before you are, because it should not so happen that, you are claiming wrong credit and losing the amounts. Next, very important aspect that comes is what happens in the case of mergers, acquisitions, amalgamations. Let us say there is company A which has filed the service tax return and there is a closing balance lying under the registration of company A. Now company A has merged with company B. Company A has lost its existence today. What to do? First fundamental thing, if the company A is still having a GST number which is active, then company A can transfer the credit in the old GST number, claim the TRAN 1 and file ITC 02 and transfer the credit to the amalgamated merged company. If the old GST number is already cancelled, then they can directly take the credit in the new GST number. Officer will disallow. Officer will say, sorry, this was not eligible, that is not eligible. But in my view, basis the simple point that mergers and amalgamations, merge multiple entities, all the documents, deed, acts done in the old company will be said to have been done in the new company and the benefit should be eligible. Similarly, in the case of branches, let us say company is having branch in Maharashtra and Haryana. The Haryana branch is now closed. If the GST number is also cancelled, then nothing can happen. If the GST number is not cancelled, they can now claim the benefit. If the company has already gone into the liquidation, the registered liquidator should file the form and claim the benefit. These were few of the practical issues. Now we will go into some legal issues. But again, before going into the legal issues, let me see if there are any questions that are there. If I can take some questions. Okay. There's one question. Please explain how to claim credit if dealer is not having excise document but having invoice showing only VAT. So if you are having invoice showing only VAT, then the details of this inventory you need to disclose in TRAN 1 that this is the goods lying in stock. And whenever you have sold that stock, if that sale is within 6 months, that is July 2017 to December 2017. Whenever you have sold the goods, if the rate of GST at the time of sale was 28%, then you are eligible for 60% input tax credit. If the rate of GST at the time of sale is 18%, then you're eligible for 40% of the input tax credit. This is a standard mechanism of availing the credit. If not, if you still don't have a document, then another mechanism is, can you ask for a document from the dealer's supplier and claim it through TRAN 3. This is another mechanism. Can dealer, those were trading VAT exempt but excisable goods, can these dealer claim on stock? Those were trading VAT exempt but excisable. Absolutely yes. See, you were either exempt under VAT or excise or service tax, either of the laws. And if you have missed out in one of the law, that you can claim now. There is no doubt. ITC not claimed in excise return, but claimed in TRAN 1. This is another very critical issue which was there. I'll come to that particular issue in the coming slide. So I'll answer that particular query as well. Now, the next very, very important aspect is legality of verification of transitional claim already filed earlier and accepted by the department. Whether these proceedings can create fresh demand for the past TRAN 1. Already in 2017, 18, 18, 19, 19, 20, department has already completed the TRAN 1 verification. They have come up with a show cause notice. We have paid it. Can they again do the entire proceedings once again? I think that is restricted under section 6 of the CGST Act. Second, very, very important question is that let us say department does the verification of transitional forms. And they say, okay, you are not eligible for credit of 5 lakh rupees. They have to issue a show cause notice. Whether this show cause notice will be issued under the CGST Act or under the earlier service tax, central excise or the VAT Act. In my view, since this is pertaining to the credits of the earlier law, department would require to issue show cause notice only under the earlier laws, not under the GST Act. And let me tell you, the time limit to issue show cause notice under central excise and service tax is already over. 15th August 2022, even the extended period of limitation is completed. So where is the power for department to issue show cause notice under the earlier law? Assume for the time being that department says, no, this notice we will issue under section 73 or section 74 of the CGST Act. Now let me tell you, section 73 and section 74 of the CGST Act talks about input tax credit. When I go to the definition of input tax credit, it only covers CGST, SGST, IGST and cess. Department, in fact, in I think November 2017, they have issued one circular stating that transitional credits cannot be said to be input tax credit. This circular was issued in the context of refunds to deny the refund to the assessees. Now, department cannot say, therefore, denying the refund we will say transitional credit is not input tax credit, but for issuing show cause notice, transitional credit is also input tax credit. It will clearly go against its own circular. Principally, under CGST Act, there is no provision. There is only one rule. I think it is under Rule 120, Rule 121A or Rule 121, where they have some power to issue notices under the transition for the transitional matters under the GST Act. But in my view, this rule clearly goes against or clearly contrary to the provisions of the Act. And we all know that Act is supreme. Rules cannot go beyond the Act. It is Rule 121. So the next very important legal issue that comes is in the context of transition of SENVAT credit of education cess, secondary higher education cess, Krishi Kalyan cess. We all know that the law was amended retrospectively, and education cess, secondary higher education cess, Krishi Kalyan cess is not eligible to be transferred to GST regime. Very unfortunate, but department has retrospectively amended the law. In the retrospective amendment, there are still some anomalies through which we can say that assessee is entitled to transit the claim through TRAN 1. But I will not go into those anomalies because that will be litigated by the department. Unless the amount is huge, we must not litigate. There are at least 10 to 12 judgments today which say that education cess, secondary higher education cess, Krishi Kalyan cess is eligible for refund. What is restricted by retrospective amendment is a transition. Transitioning to GST is restricted, but there is no restriction to claim refund. In fact, one of the judgments very recently, it goes on to say that there is no time limit to claim this refund. The time limit issued under section 11B of Central Excise is not applicable because section 142 subsection 3 of CGST Act is notwithstanding any other provisions. Hence, if any assessees have not claimed the credit of education cess, secondary higher education cess, Krishi Kalyan cess, or having claimed they have reversed because of the retrospective amendment, it is my humble suggestion to make an application for refund. Even now, you can make an application for refund. I have seen assessees having credit in crores education cess where they have reversed. Now, next comes very, very important question is what happens to a scenario where I missed transferring the credit even in the excise or service tax returns. I think this is precisely the question that is raised by Chetan. So, sir, you are saying whatever is lying in the closing balance, I am eligible for credit. But unfortunately, while filing the last excise return, last service tax return, we did not claim this credit in the last return itself. Now, whether can we claim that benefit in TRAN 1? Now, there are two aspects to be looked at here. Section 140 subsection 1 is very clear that transition is allowed only for those credits which are carried forward in the old return. Now, the one option which I can look at is I can manually claim all the credits because online filing of ST3 returns or ER1 returns is now not available. I can manually file the old returns, submit to the jurisdiction officers, revise the returns, and basis the revised return, I can now file TRAN 1 and claim the benefit. This is subject to unjust enrichment and anti-profit risk. This particular view would be disputed by the department on the grounds that there is no mechanism to revise the returns under the old laws after a particular period of time. But this is one of the attempts that the assessee can make. At the most, officer will deny the credit. Against the rejection order, assessee can file an appeal. Second option, which in my view is more recommended option, is to go for the refund route. Don't transfer this credit in TRAN 1. You make an application for refund for whatever is the excise credit that is missed to be transferred, and now claim the refund of the same. As I already mentioned you, in the context of education cess, in the context of additional duties of excise, and in the context of various other excise and service tax that was paid extra due to various reasons, department is now allowing the refund. I know at least 10 cases where the refunds are given by the tribunals. Now the next scenario, certain duties taxes are paid after filing TRAN 1. For example, I think one person has also raised a question that department during audit has asked to pay tax under RCM in 2019. 45 lakhs is paid under RCM in 2019. Or lot of assessees have paid CVD and additional duties of customs because of non-fulfillment of export obligation. They have now paid the CVD. There is no mechanism to claim the credit because old returns are over. There is no TRAN 1. Again, the answer which I gave in the earlier question, earlier issue. Since these credits are not at all carried forward in the earlier return, carrying forward in the GST returns through TRAN 1 would be disputed by the department. The correct route here would be to file an application for refund and claim the credit accordingly. In case you feel that refund is going to be complicated, you can make an attempt by filing through TRAN 1. But that attempt must also be made only after manually revising the last ST3 or ER1 or VAT returns. Next very, very important aspect, balance lying in state VAT, not transferred in GST. What happens in the case of state VAT, multiple state VAT, there was an option whether you want to transfer to GST or you want to claim a refund under the VAT. So assessees have chosen the option to claim refund instead of transfer. Unfortunately, the matter is pending before the department. Even today, the refund has not come. So in those cases, they can withdraw the refund application and now transfer the credit in TRAN 1. This is option number 1. Second option obviously is to pursue the matter under the refund, and during assessment that will be closed. Next, this legal validity of restricting the C form, F form up to 27 December. I've already mentioned my view that in my view, this is legally not valid. Many assessees have received central excise, service tax and VAT bills from their suppliers after December 2017. In financial year 17-18, 18-19, even in 19-20. Various disputes, either that person never saw the bill, it was never accounted or whatever. And in the process, assessees have paid service tax and excise or VAT to the vendors on which they have never claimed the input tax credit. In these cases, they can look at claiming the credit now under section 140 subsection 5 as input or input services in transit. In my view, the time limit of 30 days is directory and cannot be said to be sacrosanct. Next very, very important aspect is in the context of refunds. Let us say I have already filed an application for refund for the closing balance. If you have already received the refund, then no need to file TRAN 1 again. But if you have not received the refund, then you have a choice. You can either close or withdraw the refund application and transfer in TRAN 1, or you can pursue the refund directly. Another very important aspect, if already a show cause notice or appeal or the order has already come from a tribunal, in that case, you need to pursue that earlier order only. You cannot transfer through TRAN 1. This is again very, very important aspect. However, this particular declaration, which is required to be given in Part B, is only in the context of refunds which are under section 140 subsection 1, where assessees have claimed the refund and the same has been issued. But if the refund is not issued, one can always take a view that, or one can always make an attempt in first filing the TRAN 1, transitioning the entire credit, and later, once the credit is transitioned, they can withdraw the earlier proceedings. Another fundamental legal issue that comes: how can a central tax officer can adjudicate on the matter of VAT? Or how would a VAT officer or a state GST officer would adjudicate on the matter of central excise or service tax related credits? Where is the legal power? That is another fundamental issue that we need to see. Many assessees have reversed the transitional credits earlier based on oral instructions of the departmental officers. Department has come for the audit. Without issuing any audit para, they have orally asked assessee to reverse, and assessee has reversed. You can actually now look at reclaiming all those benefit by filing a revised TRAN 1. If department has issued an audit para, then you can make a reply to the audit para on whatever the matter in your contention, and you can actually look at transitioning the credit in through TRAN 1 properly now. Now, there can be all these proceedings can be pending before various authorities. It can be either at the adjudicating authority or audit authority or appellate authority or before the High Court or Supreme Court. In my view, if the matter is pending before any of the authority on the grounds of legality, that the credit itself is ineligible to be transferred, in that case, it is suggested not to transfer through TRAN 1, rather pursue that litigation itself. Don't create double parallel proceedings, because the rejection is based on a legal issue. Department says this is an ineligible SENVAT credit or whatever. But let us say if the proceedings are not because of the legal issue, it is because of the TRAN 1 related issues. Assessee has incorrectly disclosed in TRAN 1, earlier TRAN 1, not disclosed, wrongly filed, 10 extra, 10 less, wrongly claimed through 3B. So all these disputes are not legal disputes. So there is no question that the department has raised on the eligibility of the credit. It is because of the procedural lapses the credit has not been allowed and the show cause or appellate order is been issued. In those cases, in my view, one should make an attempt of filing through TRAN 1 and properly regularizing the thing and withdrawing the earlier application or whatever appeal. However, as I see, officer would possibly disallow in either of the cases on the grounds that you pursue that earlier matter and don't come here. In my view, if the issue is already in litigation because of the transitional form related issue or a disclosure related issue, then department should not encourage in, continuing the litigation. Rather, they should suggest to close that litigation, revise the form now and do away. Because anyway, again, the form will be verified by the officer, right? So it is not like assessee can claim anything illegal. So if the matter is assessee has filed a writ petition before High Court, he can actually withdraw the petition and go for TRAN 1. I think this was one of the questions that was asked. Legality of order beyond 90 days, as I already mentioned, is 90 days time limit. In my view, is only directory. Now, it is very important for taxpayers to understand what are the various precautions that they need to take and what are the preparatory aspects that they need to look at. One and fundamental thing which I've already mentioned, that before filing the form, please verify the completeness and correctness and have a proper maker-checker control. Very important. Many assessees, I see, no, we have taken everything properly earlier. There is no issue. My suggestion to you is please again go back and take some time out and check the old AR1, ST3 and VAT returns. If there is any credit which is not taken, you can take it now. Review the books of accounts for financial year 17-18. Review the stock details for financial year 17-18. It may be possible that you have paid some vendors with central excise bills, service tax bills. You have not claimed the credit on certain stocks which was lying as on date. You have claimed credit on a standard mechanism where you have a proper tax paying document, or you have not claimed the credit for stocks beyond 12 months, or you have made the payment of duties or taxes in the course of departmental audit, investigation, scrutiny, for which you could not claim the benefit. In all these cases, this is an opportunity to claim the benefit. So, all these workings and calculations has also needs to be verified properly. Another fundamental thing. Let us say I have to take a credit of 10 lakh rupees. I have taken the credit of 10 lakh rupees, but the procedure through which I have taken is not correct. Instead of putting in field A, I have put in field B. I got the 10 lakhs credit, but I have claimed in the incorrect field. It is suggested to revise the TRAN 1. Because tomorrow, whenever department will come for audit, they may disallow. So it is better that this form is not just reviewed to claim additional benefit. This form must be reviewed even to correct the earlier procedural mistakes. So irrespective of whether you have additional credits or not, it is suggested to go back and review your forms, whatever that you have filed earlier once again, and check whether you have all the workings in place. Look at the physical copy of invoices. If the physical copies of invoices are available, then you can take full credit instead of 40% or 60%. Very, very important is that the entire benefit is going to come after explaining the case to the officer. So once you submit the form, you need to give a proper covering letter explaining your case, why you are eligible, and you should appear before the officer and show all the evidences, documents, along with the legal provisions of the Act, rules, regulations backed by judicial precedents, so that the legitimate credit is not denied. So proper and consistent follow-up with the departmental officer, and rather I would say a proper pleading of the matter is needed so that the credits are properly transitioned. So I think these are the various legal and practical issues that we have come across, which I thought, we all should be available. Everybody must know on the transitional matters. So now what I will do is let me look at certain questions if they are pending, and then we can have a Q&A further. We have already claimed refund of VAT component and now claiming excise component in TRAN 1 of CTD. I did not get the question. Okay, sir, VAT ITC which were not allowed due to mismatch in VAT assessment, such ITC can be claimed. In my view, yes, but then again, why the mismatch is not allowed, what is the reason, and all those things needs to be looked at more clearly. If supplier has given through ledger confirmation utility, I don't know, maybe this question is relating to C form, F form related matter. So in case of C form, F form related matter, I think I've already mentioned my views. Okay, let me just. So if anyone have any more questions, I would ask, you can just raise your hand. So we'll try to, unmute you and you can ask the question. This will benefit all the others. And most importantly, we have given a feedback form in the chat box. Please take out 2 minutes for the feedback form. Your feedback helps us in continuously improving our sessions, and also look at what more sessions you want us to conduct. So I think Baheti sir has got some question. He has raised hand. So Bhavesh, can you please look at unmuting Baheti sir?
Hello.
Yes, sir.
Hello. Yeah,
Yes, Baheti sir.
Yeah. Ledger confirmation is related to match and mismatch and not related to C form and these other.
Relating to what, sir?
Relating to match and mismatch, J1, J2 mismatch.
Ah, okay. J1, J2 related matters. So because of that, they have not transitioned. So I think this issue is of a legality issue, sir, whether at all it is available under the earlier law. So it's a legal issue. And in my view, if already an assessment is completed and the order is issued, then one needs to pursue that assessment and that cannot be transferred to TRAN 1.
Yeah, right.
Okay, let me simply take you through the portal once. So this is how the portal looks like. Let me log in. So if you see under Services tab, we need to go under the Returns tab. Under Returns tab, you will find this Transitional Forms. Here we need to click. Now under Transitional Forms, if you see the default status is not filed. There are a lot of people who have asked questions. Sir, I've already filed. It is showing as not filed. For all the assessees, the default has been kept as not filed. So don't worry that, what I filed earlier, whether it is gone or not gone. Don't worry. It is for everyone. They have changed it. We need to give a declaration whether you have filed the returns under existing law for all the 6 preceding months. Yes or no. Okay. And here one can directly go click here and fill online, or you can also upload based on the CSV template. If the volumes are huge, you can upload through CSV template. If the volumes are not huge, then you can go for directly putting the details in the online tab. From here, you can click here to download the Excel utility. If you don't want to do it through Excel utility, you can directly put the details in the online portal only. Okay. If you want to download your earlier form, you can click here. Then you can download earlier form, filed TRAN 1 form and the relevant details. Very important is that once you press submit button, nothing is going to happen. Nothing. It will get freezed. Not after filed button, but after submit button also nothing can happen. So this is extremely important. And this is the tab for TRAN 1. This is a tab for TRAN 2. Okay. And this is a tab for uploading documents. So if you have any other documents, covering letter, evidences, invoices, Excel sheet, workings, computations, or TRAN 3 credit transfer document, all these things can be uploaded. I think there is a limit of 5 MB. the file should not be larger than 5 MB. So that is one aspect to be taken care while uploading the details. So I would say this is about the portal. So in case anyone have any more issues, please put in the chat box and kindly fill the feedback form, and then we'll close the session. Oh, there is one person who has mentioned that he's already filed the form. So congratulations and wonderful. In case you have any experience that you would like to share, Rahul, it would be good because it can benefit others. So any specific aspects which I have not covered, which you have faced while filing the form, let us know. We will unmute you and you can explain. Amol Nate has got a query for invoices dated before 30th June but booked after 30th June. For such cases, what should be mentioned in document date column? See, document date will always be the invoice date only. What you have booked in the accounts is only for your posting. Document date column is the date on the document. Okay, sorry, feedback form. Got it. Anyway, I was a little surprised because as I know, many people have not filed TRAN 1 as of now. Okay. So thank you all for patient listening.